Stocks on a 5-week losing streak. No signs of an end to the war. We are trading the markets with the investment committee as always. And joining me for the hour today, Joe Terranova, Carrie Firestone, Sarat Sethi, and Stephen Weiss. Let's check the markets. We are now green with everything but the Russell 2000. The Dow is trying to get to a 1% move today, about 400 points or so. Let's give you a little state of the pullback, if we call it that, since the war began. S&P's down about 7%, a little bit shy of that. The issue, as all of you know, is there just hasn't been really anywhere to hide. Bonds have been rough. Yields have been backing up. Yields are down a little bit today, which is helpful. In fact, the 10-year, Steve, is down about 15 basis points from last week or so. The Fed chair was speaking at Harvard this morning and said inflation expectations remain, quote, well anchored. That was important.
Yep.
And you actually saw the market tick up a little bit on that, and yields tick down a little bit. So that's sort of the state of play. How do you see it?
You know, without that statement, Scott, I'm not so sure we'd be in the green except for the Russell today, because we've had other statements, conflicting statements from the Fed, that from other Fed governors, that maybe they're not so well anchored. So I think it's positive, but the question is, will he be saying the same thing if the war endures for a little while yet as it filters through? So the way I look at the market is in the following, that we just don't know what the risks still are. I can see some headwinds. I think the fact that we're going to have a good earnings season is well telegraphed and absorbed into the numbers as it was with prior quarters. But we've got a Fed that, for better or worse, only means that it's holding tight and not going to raise. Cuts, I believe, are out of anybody's expectations. So if the oil crisis ends, which means the war ends, then you could see inflation resetting and the possibility for some cuts to come back on. That would be positive. And then don't forget that we'll get midterms. And to me, midterms will be a referendum on Trump. And let's face it, regardless of Trump's approval rating, midterms always go to the other party from the incumbent. So except for twice over the last how many years. So that'll put an end to his pro-business agenda if, in fact, that's what it was, and that's another headwind. So on balance, I think that the market intermediate and longer term looks fine. Short term, I'm still not ready to put capital back in.
Yeah, fair amount of selling from the hedge fund community, to which, you know, Goldman's desk is taking a look at that, and they say there's some signs of capitulation are starting to emerge. Which, if you consider it a contrarian view, it's like maybe the selling is getting a little exhausted from that standpoint. Last week, hedge funds net sold equities for a 6th straight week, and the fastest pace since April of 25, liberation period, obviously. On a trailing 6-week basis, the recent U.S. net selling by hedge funds, the 3rd largest over the past decade, and starting to approach the levels in April, May of 2020 during COVID, and to a lesser extent into Liberation Day. So people are trying to look at those signs as saying, okay, maybe we're really close to the end rather than at the start of something even bigger and more dramatic.
Yeah, I don't disagree with that, but you also have to look at where the hedge funds came from. I believe going into that, they had very high leverage, like top leverage they typically take. So they're reversing that bet or taking that bet down. But look, I think the only thing that really gets it down meaningfully is if we do go after Iran's energy assets and put them out of commission, because they are a large part of OPEC, or if we put boots on the ground. That'll be a major leg down. I do expect continued volatility. I do believe that it continues to go down, but I still see overvalued. Now, take a look today at the GEVs, which I own, FTAI, Vertiv. All these stocks are going down pretty significantly today. So they're still looking for profit taking in those names. So where the selling is subsiding, like a Microsoft, I guess we'll talk about it later, where there has been a lot of selling. So the reason I bought Dick's, we can go back to that, is because I think I went through the wars already. Stocks down significantly. Look, everybody knows consumers hurt now. So I see upside from there. So I still think it's a very tough time to put money to work in the market for the short term. For the intermediate term, depending upon where you are, you can do that, but not in battleground stocks like a Microsoft or in a GEV, which I still think is overvalued, even though I own, or a Caterpillar.
You need to have tech stabilize.
Absolutely.
Or this market's not going anywhere.
Absolutely.
Not with all the questions hanging over now the broader economy and the global economy with the spike in oil. Tech's just coming off its worst week in a year, right? NASDAQ's down 10 of the last 11 weeks. It's never done 11 in a row.
No.
Never.
No.
It's never done 11 in a row. Mag 7 over that period of the losing streak, actually last week, 800 billion plus thereabouts in market cap wiped from what these stocks have done, led by Meta, which was down 11.5% last week, Alphabet 9, Microsoft 5. Let's just get to Weiss's thing real quick, since you sort of teased it, and then we'll move from there. But you trimmed Microsoft. I mean, I asked you the other day. The stock's been horrible. Whether you were thinking about, if anybody who owned it that day that was on the show, anybody thinking about selling it, and you said, yeah,
I've been thinking about selling it for a while, knowing full well that I could be making a short-term bottom in it, so I kept some of it. I didn't sell it all. But look, I just don't see the fundamental catalyst to get it higher. It could continue to bounce if the market bounces, but frankly, I'm exhausted by it. The software debate's going to continue for quite some time. I don't like the missteps they've had in AI so far. I don't parallel it to Google, Alphabet, where they were working on it, and something came to fruition. So I think at this point, that I'd rather have a very small position in it than have as big a position as I did.
Guys, what do you think? I mean, Sarat, some would look at this and say, well, maybe this is emblematic that these names have been washed too much, right? Even as Jonathan Krinsky puts a note out as we come on the air today and says, now the market's shooting the generals, right? A necessary but painful development. Well, maybe it was necessary, and maybe it has been painful. But maybe enough is enough. You own Microsoft.
I do,
for
and
example.
I own Google, and I own most of these, and I think it is a clearing price for some people taking their profits. But I also think that these are really great cash flow companies with great margins. They have levers to pull. So if they see certain things in the market where it's demand, if it's data centers, it's et cetera, they have the ability. It's not like they have to go to capital markets all of a sudden to get cash flow, which could then in a credit crunch cause issues. They can pull back and they still have demand. So I do think that I wouldn't sell it at these levels because I think they've gotten down too much.
Hey, can I just add one thing?
Yeah.
I still have similar plays. I haven't shaved my Meta. I haven't shaved Alphabet. So I'm well versed in this area in my portfolio. So that's just one. It was just too much exposure.
The way that the multiples, Joe, have compressed here leads me to ask the question that I did. Have they been washed enough? For example, at the high, Meta's PE forward was 24 times. Now it's 18. Okay? That's a significant come down in terms of the valuation. Microsoft was 27.5. Now it's 20.5. Alphabet was 30. Now it's 24. We'll get to another one. Like NVIDIA was 25.5. Now it's 20. NVIDIA now trades, by the way, at a slight discount to the S&P on a forward PE, or right around par, for the first time in 10 plus years. It's the cheapest it's been relative to the S&P in some 10 years.
So I appreciate Steve's remark that he was still maintaining exposure in the Mag 7, because I think that's the right thing to do. First of all, I think you have to look at leverage at all times and look at positioning and understand, as Steve said, we came into 26 with everyone extensively long. We've worked that off. Right now, the systematic bias is sitting at neutral. But I think it's a classic example of what's going to lead us out is going to be first in, first out. I think it's going to be technology. I think it is going to be the port in a storm, the safety that's provided by these Mag 7
first
names.
in, first out would imply that software is going to lead you out, not just technology.
I think it's universally going to be technology. I think it's going to be some elements of software itself, whether it's Adobe or Salesforce or Microsoft or Oracle. I do think some elements of software, yes, to your point, they have to participate.
Why did you mention Adobe? Just a slip? You just pulled that out because you think that's going to lead you out?
Adobe's not a name that I own, but it is a classic example of one of the names that went first in. The valuation has gotten incredibly cheap. It doesn't mean fundamentally you resolve all the headwinds that are in front of it, but if the market is going to stabilize and we're going to see recovery, I think it can participate there. I think you're always looking at what are the indicators internally in the market that can suggest the turn. And I don't think it's going to come from continued buying of energy or buying materials. I think it has to come from some of the areas of the market that have been decimated, stabilizing and modestly recovering.
Kerry, Morgan Stanley says it's time to buy Meta. That's the quote on their note. They did cut their target to 775, 537 now. So whatever
Plenty of
with
room,
that.
yeah.
But like we're just talking about with Microsoft and some of these others, is it time to buy Meta? The stock's just coming off a dismal week.
If you bought Meta in the past when it's had this kind of drop, the same is true of Microsoft. Meta has had several severe declines. That would be a smart move. There have been two major declines in the stock, both of which were incredibly good buying opportunities. And with Microsoft, let's remember that it owns half, roughly, of OpenAI. I don't know what the dilution has been lately. That company, at some point, will come public. We're going to see the value. That was a smart move for them to make when they originally
although
made
they're
an
now
investment.
warning of the risks as a result of that.
Well, I get it. I'm
is
just saying.
OpenAI.
Yeah, but that's what today people are talking about. That will change. That narrative will change, and it will be seen as a positive for Microsoft when we're looking at OpenAI in a different way. So, I think people are scared right now, but it's an opportunity. If you don't own these stocks, I think both are attractive.
What about NVIDIA? Can we discuss this? Unless you have something to say on
I want to
Meta?
talk about Apple. I want to talk about Apple.
I'm going to get there. Just give me a moment, because I don't want to move off of NVIDIA after I read the stat that I did, that it now trades at a slight discount or at par to the S&P for the first time in 10 plus years.
Yeah.
A lot of people have said 170 is the line in the sand on this name, and that's where it can't seem to get to. What about this stock?
Yeah, so that's the big debate. And despite a great quarter, despite great guidance, investors aren't believing it. And not all investors, obviously, there are lots of shareholders there. But that's the debate. Is competition finally coming? We're actually seeing it coming in some areas. Are their chips too expensive? So that debate is going to take a while to get it resolved, because you do have these well-capitalized companies like Meta, like Apple, like Alphabet, and others, AMD, that are working on chips. And some of them come into commercialization. So that's why NVIDIA is not able to move off this level, like 175. It got to 180 briefly last week at a bounce, because their chips are so expensive that you can come in and price underneath. And you may not need all the power their chips have, assuming the new chips don't have that power, which the companies are saying they do.
That's a pretty big,
It's a
dare I
shortage
say,
of them.
bear case to lay out.
Well, but that's the
about
debate.
NVIDIA.
That's the active debate and why the stock's where it is.
Don't you think of all the Mag 7 year to date, NVIDIA was the one name where everyone said there's resiliency there, and you're going to be hesitant to move away from that position last of all the Mag 7. I think that's what's in front of us right now. It is the last of the so-called generals that we're seeing a recalibration in terms of the valuation and the price performance.
I don't know. Look at the chart. It's been
The other debate,
choppy at best.
the other debate on it is
Better than the others.
that with their vendor financing, that they're financing all their customers.
Oh well, please. I mean, we could have an hour-long
But
conversation.
that's
about
part of the
risks
conversation as well.
and the alleged rewards of not
exactly.
just them, but all of those circular relationships that do exist. So Apple, I'll give you that now. By the way, Melius says it can reestablish itself as an AI toll, and $350 is the price target. They reiterate that and the buy. What do you think?
Boy, I sure hope so. Let's hope it could first defend what's going on in the moment. I said last week I bought it at 250, buying it against the point of reference of the 200-day moving average. Well, guess what? You're now below that 200-day moving average. If you could pull back that chart maybe over the last year and show the 200-day moving average. A critical price point here is January 20th. That's the 243 low. What do you not have in front of you? You really have to get to earnings very quickly. We're a good month away from hearing that to see if the continued recovery in China is underway or not. But I think NVIDIA and Apple, again, I'll reiterate this, I think these were the two names that people were most hesitant to move away from their positions because they believed in the long-term story. They believed in the put underneath the market for both of these stocks. And I think what we're witnessing today is that last vestige of that bullish sentiment maybe neutralizing somewhat.
Apple was only down 2%, Sarat, over the last week. so much, haterade around this name and the AI lack of story. And then you started to have the stories emerge that, well, you know what? They're actually the only ones who aren't spending ridiculous amounts of money, just according to some, on AI. So maybe that's a reward. Now maybe they're slowly starting to get their, mojo on part of what their AI story is going to be. And the stock has been, dare I say, rewarded for it.
And, the defensible position of Apple, for what you just mentioned, and also the cash flow and the recurring revenue and the services piece, that's one that the others of the Mag 7 don't have. So I think investors look at this as the safer of the big consumer. It's like a consumer staple in there that you just keep on having upgrades and you distribute and you get bigger and bigger. And the moat gets bigger as more people stay in there. So I think that's why you don't see that multiple kind of, the opposite, right? It doesn't get depressed. It's still growing, but it's growing 4-6%. But we know that it's a defensible position.
You still have issues in tech today. Nasdaq's just gone negative. AMD down almost 2%. Micron, 7%. Another 7%. Is that right?
That's incredible.
Broadcom down 2%. Yeah, there's some of these losses. There's your Micron again. Now pull that back pull Micron back like
March 18th.
like a month just for the sake of pulling it down.
It's down 26% since March 18th.
CoreWeave's down 7.5%. Intel's down more than 4%. There is the mountaintop. They saw the mountaintop at Micron, and now they've been steadily coming down ever since. That's a key question too within this market, whether the memory trade is, impaired for the foreseeable future. SanDisk was down 9.5% last week. Western Dig down almost 5%, and Seagate down almost 4%. $100 billion in market cap wiped last week.
Yeah, but this is the life of semiconductors. I mean, we know over time semis have been cyclical stocks, particularly these semis. So, they bypassed it for the last year or two, and now we're seeing the cyclicality has returned, and they benefited enormously, and investors are saying, oh, wait a minute, I don't want to be on the downside.
Cyber names, are they going to stabilize? Over the last week, double-digit declines for many of the names there. Zscaler's getting a nice move today. Last week, it was down 12%. I saw Palo Alto's Nikesh Arora buys $10 million in stock in the open market. That's an interesting move. Obviously, a sign that he thinks his stock's declined too much. The stock's getting a nice move there as well. You sold most of your exposure here. I still feel like this is such a favored and hyped up group. Do you feel like that's changing?
No, I don't think so. I think the sentiment surrounding cyber is consistently bullish.
Is it?
Yeah.
I don't feel like it has been lately. It's been almost consistently bearish because of Anthropic and these new tools that Anthropic unveils seemingly every week. One of which has had a negative impact here. It's almost changed the endlessly bullish story.
Are the majority of your panelists and guests on the 3 o'clock show short cyber, or are they continuing to defend cyber?
Well, do you have to be short it? Maybe you're just not in it. You're not in it anymore.
I'm not. No, I'm not, because I'm reacting to price. That's what I do have. It's sell discipline that reacts to price. But the story and the narrative that I continue to hear as cyber keeps moving lower is about the fundamental tailwinds that rightfully exist. But that doesn't mean you can't see a recalibration on valuation, and that's ultimately what's been going on.
Why did you use the word rightfully? That's like you making the statement that the bullish narrative is still intact, whereas some question it as a result of AI and these new developments. If it's rightfully intact, why aren't you buying any of these more on the decline? Why aren't you buying them back on the declines, even personally?
Because there is a dislocation between price and fundamentals. Markets throughout its history will prove that evidence to you, and that dislocation can happen over a 3-week time period, a 3-month time period, or over a 6-month time period. And I think we're in the midst of a multi-month dislocation period where, for my strategy, I want to sit on the sidelines. I acknowledge and will return when price proves correct that the fundamentals are strong. But now's not the moment.
Has price and fundamentals disconnected from one another in private credit? Because those stocks have gotten punished. The Fed chair, by the way, was speaking this morning, and at Harvard in which he was asked a great question by a student, I believe, in the audience, and gave an interesting answer. He said, we're watching it very carefully, looking for connections to the banking system that could lead to contagion. We don't see that. Doesn't seem to have the makings of a broader systemic event. Now, that mirrors, certainly matches up with what many have suggested, that yes, it could get worse. We're watching it very closely, but Surratt doesn't have to be systemic. How do you see this?
I agree. I mean, I think you've got the sell-off that came first. All of them got hit hard. They are contained in their own different funds. And yes, there will be some write-downs that we don't see because they're private markets, right? They don't do day-to-day. And I think it took down a lot of the banks. It took down a lot of the KKRs, Blackstones, et cetera. And really, until we see something other than some one-offs, I think even the Fed's watching it and saying, hey, yes, there is something to watch, but it doesn't mean you necessarily have to sell all these stocks.
Right, you think the financials, broadly have been hit. You bought more Goldman Sachs. Do you think it's been unnecessarily punished by some of these issues, just the broader worried about the economy or whatever else, lack of capital market activity because of all this?
So it's best in breed. It's had relative outperformance to its financial banking peers. I think it thrives in this type of environment of hyper volatility. I think they're the best in class in what they do. I'm sitting on a position since April of 24 at 398. I wanted to add some financial sector exposure. I don't feel, to your question previously, comfortable enough. There's a strong degree of clarity surrounding the fundamentals of private credit to step in that direction. I have no exposure there. I would at some point. I'd probably look at Blackstone. But to me, Goldman Sachs is the clear winner in this environment, and it's proving itself with the price resiliency that it exhibits on a daily basis.
All right, let's take a quick break on the list.
I wish. I mean, to me, as Ferd, I was playing momentum in data centers here. The stock is not attractively valued at this level.
It's very expensive.
Yeah, so I wouldn't be surprised to see more downside. I'd say all those names on that list, pretty much are ones that have bit the dust. So they're saying they can't go down more is the reason to buy it. Not that they're typically stable names. I don't believe they are, with the exception maybe Coca-Cola.
What about Danaher, Surratt?
Look, Danaher, Thermo Fisher, high-quality businesses. Really, the effect of what's going to happen to the administration with the RFK, but then also internationally and government spending. I think these are ones you own for 3 to 5 years at least. They're terrific compounders and high-quality businesses.
What about Uber, Joe? Uber is on this list?
No.
No?
Nope. Unfortunately, I don't see it. Look, in the names to me it's energy. Uber's broken down. It's energy. It's maintaining your energy exposure, even if there's some form of resolution. There's oil prices are not going to implode down to $60 that quickly and return to where they were. There's still
I don't
going
think
to be.
They have to, though.
There's still going to be challenges.
That's a huge relief.
Yes. There's still going to be challenges in front of us as it relates to energy, the consumer staple names, the Coca-Cola, the Monster beverages,
Coca-Cola's
those Pepsi.
on the list.
Those are that's where you find the stability in the market. And there's one sector that I don't find on this list that I think you should be looking at, and that's healthcare. Because healthcare provides you that degree of stability in this type of hyper-volatility environment. It proved itself in 2022.
The bet here was, let me find stocks that have been crushed, and I don't think will go down anymore, rather than traditionally stable names aside from Coke.
All right, we'll take a break. Let's talk about some streaks. Leidos Weiss, 9-day losing streak it's pacing for.
Yeah, look, I spoke to the company last week because I'm bothered by it.
What did you say? What the heck's going on here?
It's a core position, yeah. And, not a lot now. They slightly missed the last quarter, even though I thought it was a non-event. But it's software debate that's hitting them as well. So while a lot of them just know them for the scanners you go through at the airport, it's really that debate. Can what they do be done through AI? I do not believe so, but that's what's going on. And unfortunately, you're going to need a really good quarter to come out of this.
Surratt, Disney trying to snap a 5-day streak.
Yeah, new CEO. I mean, it's 15 times earnings. I like it, but the negatives right now are overwhelming. So I think long-term investor, you want to own this and buy.
Costco's going for a 5-day win streak, Joe.
It is. Costco really strong, Walmart really strong, TJX, only consumer staple name that's better, Hershey Corp. Own that as well.
What about CF, which is trying for 5 days too?
I'm using a 119 stop on my position that I established at 104 on March 2nd. We continue to have challenges as it relates to fertilizer and urea exports. Right now, corn prices are down 10% year to date. You're seeing a shift in planting go from soybean to corn to plant corn. You need the urea. CF is a producer there. Should continue to move higher.
All right, we'll take a break. We'll come back with final trades on the other side. Steve Weiss.
An unstable healthcare name, United Health. I think it's discounted a lot of bad news.
Okay. Oh, wow. Green across the board. When was the last time we had final trades where it was all green? Feels like it's been forever.
When was the last time we had green across anywhere?
Right.
Morgan Stanley, I think it's been beaten down too much with the credit and the capital markets activity.
All right. Care.
Same vein, Blackstone stocks 14 times earnings, down 45%. Nice growth ahead.
Okay. Joey.
Hiding out in the safety of insurance in the financial sector, Allstate. No technology names up there, huh?
No. We'll watch all of it. I'll see you at 3 on Closing Bell.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.